TextCalc 19, entering income. In the previous video, we showed you how to enter the dependent information and the case information. The next step in the order in which I prefer would be to go right to entering the income information that you have. So skip over the filing status and really these top four variables and start with the really the $ rows where the $ start, and enter in the information that you have about each party's income. In my example, I'm going to give you a pretty common scenario where someone would just have earned income. I have Henry, he makes $115. These are all annual inputs, by the way. You want to make sure that you put in the annual amounts. And then I have Julie, who's making $41,000. I'll show you a couple of different ways to enter income, but for the most part, large majority of cases are usually going to use earned income and self-employment income as your entries. So earned income is W-2 type income, so someone who gets a W-2 at the end of the year, flows through on line 7 of your tax return. Those are the most common kind of wage workers. That would be earned income. Self-employment income would be, again, your Schedule C 1099 type income that people would receive if they're self-employed. Everything else that kind of would be seen as income or coming in usually falls under this other income cell. The difference between these three is the Social Security or kind of payroll taxes. Obviously, if you have a W-2, you're going to have some Social Security tax. If you are self-employed, you're going to have more Social Security tax. You pay double. And then other income does not have any payroll tax. So that would be like if you're receiving a pension in pay status, or if you had a distribution from a retirement plan. Many other things really can fall under other income, but those would be sources of income without any sort of Social Security or payroll tax. So those three, I would tell you, are the most common, certainly capture the large majority of income sources that you'd come across. But there are many others that can sometimes be confusing, and what we've done is created some custom income cells. So there's 3 cells here for each party where you can enter in different types of income. You have to make an entry first. So in my example, I actually have Henry who gets a bonus, and I like to show that on a separate line. So I'll plug in his $25,000 bonus, hit enter or click out of the cell. Either way, you have to kind of make an entry. And what you're going to see is then a pop-up that comes up and shows 27 different entries that you can identify that income as. You'll see in here tax-free income, SSI, SSDI number 20 is also a common one. There's duplicates, so you can do other income, earned income, and self-employment income, kind of the same as the ones that are already above. I like to separate, different sources. So let's say someone has 2 jobs. I like to put one under earned income, and then I'll use the custom and kind of duplicate it and say, well, this is his second earned income. Sometimes you might want to do overtime on a different line so that you can easily put it in and put it out. Many different reasons why you would want to duplicate those things, but there's often reasons to do it, and I like to use the custom income cells to create those. This also addresses kind of different types. There's earned, other, and self-employment without state tax. So if you have a client without any state taxes, obviously the K1 and partnership and S-corp income, passive and non-passive. They're also over here on the right for non-service passive and non-passive income from a K1. That's a new change to the tax laws. It's referencing the qualified business income deduction, and it discusses a service versus a non-service business. So if you do have K1 income, you'd want to make sure you're using the right column there to identify it as service or non-service. Real estate income, investment income, military retired pay is one that's in here. Disability, tax-free, long-term capital gains. Number 22, auxiliary benefits for a child. So if someone's receiving Social Security and they're getting benefits for their children, that's referred to as auxiliary benefits, and we want to indicate that, number 22. But obviously what you can see is there's 27 different options here. What you have to do is enter the number that you want. So I'm going to hit, because this is a bonus, I'm going to hit number 3, hit OK, and then you'll see it'll change the text to say this is bonus income at 25,000. And again, all this really does is allows my calculator to make sure we tax it correctly. So the better you are at identifying what that income is, hopefully it fits in one of those 27 options or one of these 3, and the better the program can calculate the accurate taxes. So there's 3 cells there. You can do up to 3 different custom incomes. Investment income, obviously that was in there as well, but there's another line for that. Pre-tax payroll deductions, this is more of a creative cell, I think, to show a reduction in the available funds of subject to division. So if you put a number in here, what you're doing is taking that amount out of the equation. It's kind of ignoring it for both division and tax purposes. So understand what you're doing when you do use this cell is you're taking money out of the marital pot. Other ways you can kind of see the combined income change when there's one in there. And if I put 10,000, you can see it's going down or taking money out of the equation. So I think that's more of a creative cell. It's often not used. Sometimes it's by compromise, a way that we can factor in, let's say someone paying for both parties health insurance or something like that. We can use that cell to kind of subtract out that cost. Not too often used in my cases. Total Social Security, again, this is you can type in the total amount they're receiving and it will calculate the taxable and non-taxable components of it. The taxable and non-taxable pieces are based on other income. So generally speaking, if you didn't have any other income, total Social Security would be non-taxable. But as you earn other income, portions of that Social Security become taxable. So this is kind of a moving cell, and that's why you can put it in the total and then allow the program to help you calculate the taxable and non-taxable components. We're going to talk about child support paid and received here in a second. The next cells would be maintenance paid and received. You're going to see now with the new program and going forward that the defaults are all set to non-deductible maintenance paid, non-taxable maintenance received. There is still the ability to toggle this to either family support or deductible maintenance. So if you do have a case later on, let's say it's a post-judgment issue, you can still calculate using the old deductible rules. However, the default is really set to non-deductible, and you'd have to toggle it to deductible if you wanted to do one of those calculations based on an agreement from 2018 or prior. Real estate tax, mortgage interest, itemized deductions. Again, these are entries that you can make to adjust someone's itemized deductions. Most people now, with the changes to the tax code, are likely going to take the standard deduction. The standard deductions are quite a bit higher. There's a limit on taxes paid. So you can enter some in here, but generally speaking, you're not going to see a lot of people now really itemizing on their returns anymore because taxes are capped at $10,000, and for married joint, head of household, married joint has a standard deduction of $24,000, head of household is at $18,000. So you really had to have quite a bit of interest or other deductions, itemized deductions, to meet those thresholds. So they are here though if you want to plug in that detail. But again, that's just something that I rarely use. In a case, it's more so looking at and assuming they would take a standard deduction when calculating taxes. So obviously when you look at this, I'm going to plug back in this 25,000, and again I'm going to hit enter, and then it will pop up the screen. I'm going to hit number 3, call this bonus income, hit enter again, and it will change that text. So it's really step 2 in creating and using this product is entering into the income information you have. Hopefully that custom income has one of the 27 options there, fits your income a little bit better. Otherwise, I would say other income is kind of a catch-all if it doesn't fit anywhere else. But again, very rare that you need all of that. Again, those cases are few and far between. The majority of people that are going to come through are going to have either wage income or self-employment income. Thanks.